let's break down Tech Mahindra's quarterly results. Analysts initially estimated a profit of 1,013 crore rupees for the second quarter, based on a revenue expectation of 13,211 crore rupees. However, the actual numbers were significantly higher. Tech Mahindra posted a net profit of 1,257.5 crore rupees, marking a 45.4% increase from the same quarter last year. Additionally, revenue came in slightly above expectations at 13,313.2 crore rupees, up 3.5% year-on-year. These results reflect the company's strong performance, beating market expectations and showcasing growth in revenue and profitability. Let's now look at Tech Mahindra's valuation and key financial ratios. The company's market cap stands at 1,65,136 crore rupees, reflecting its significant presence in the IT sector. It currently trades at 1,688 rupee per share, with a price-to-earnings (PE) ratio of 50.4, which suggests it is trading at a premium compared to the sector average. The return on capital employed (ROCE) is 11.9%, indicating how efficiently the company is using its capital. Additionally, the company has an earnings per share (EPS) of 33.5 rupees and offers a dividend yield of 2.37%, which adds to shareholder returns. Now, let's examine Tech Mahindra's price-to-earnings (PE) ratio over the last 5 years. The current PE ratio stands at 50.4, significantly higher than its historical median of 23.1. This suggests that the stock is trading at a premium relative to its past valuations. The PE ratio has seen a sharp increase, particularly in the last year, signaling strong investor optimism about the company's future earnings potential. However, the rise also indicates that the stock may be considered overvalued compared to its historical average, so it's important to assess whether future earnings growth justifies this premium. Over the past 5 years, Tech Mahindra has demonstrated consistent growth in both sales and profit. The company achieved a compounded annual sales growth rate of 8%, driven by its strong presence in the IT sector. On the profit side, however, growth has been more volatile, with a compounded profit growth rate of -11% over 5 years, reflecting certain operational challenges and market conditions. Despite this, Tech Mahindra's ability to maintain steady sales growth highlights the company's resilience. Additionally, its profitability rebounded in recent years, with a notable 44% stock price CAGR in the past year, reflecting investor confidence. Looking at the technicals, Tech Mahindra's stock is approaching a key resistance level around 1,800 rupees, which was previously tested but not broken in 2021. The stock has seen strong upward momentum recently, climbing from a support level around 925 rupees in early 2023. This rise suggests bullish sentiment, but investors should be cautious as the stock is nearing its historical resistance. If it breaks through 1,800 rupees with volume, it could signal a strong breakout. However, failure to surpass this level may result in a pullback, making it crucial to monitor how the stock performs around this. Let's take a look at Kotak Mahindra Bank's quarterly performance. The bank was expected to post a profit of 3,424 crore rupees for the second quarter of FY25, based on analysts' projections. However, the actual profit came in slightly lower at 3,344 crore rupees, reflecting a 5% year-on-year increase from 3,191 crore rupees in the same quarter last year. The bank's net interest income, NII, saw an impressive 11% year-on-year growth, reaching 7,020 crore rupees. Despite the positive results, Kotak Mahindra Bank's net interest margin, NIM, narrowed to 4.91% compared to 5.22% in the previous year. Now, let's look at Kotak Mahindra Bank's valuation metrics. The bank's market capitalization stands at 3,71,995 crore rupees, placing it among India's top financial institutions. It currently trades at 1,871 rupee per share with a price-to-earnings (PE) ratio of 20. This indicates a fair valuation when compared to the industry average. The bank's return on capital employed (ROCE) is 7.86%, while its return on equity (ROE) is a healthy 15.1%, reflecting strong profitability and efficient capital utilization. Additionally, Kotak Mahindra offers an earnings per share (EPS) of 108 rupees, though the dividend yield is relatively low at 0.11%. Taking a closer look at Kotak Mahindra Bank's price-to-earnings (PE) ratio over the last 5 years, we see that the current PE ratio is around 20, compared to its historical median of 28.5. The PE ratio has fluctuated in recent years, reflecting market sentiment and broader economic factors. In the past, Kotak Mahindra's PE has been significantly higher, even touching above 80 at times. This indicates that while the current valuation is lower than historical highs, it still represents a fair valuation relative to its earnings growth. Investors should consider whether future earnings growth justifies the current PE levels. Kotak Mahindra Bank has demonstrated steady growth in both sales and profits over the last 5 years. The compounded annual sales growth rate stands at 14%, while compounded profit growth for the same period is 20%. This highlights the bank's strong financial performance and operational efficiency. The bank's ability to consistently grow revenue while maintaining healthy profitability has been a key factor in its success. Net profit has surged from 7,204 crore rupees in 2019 to 18,213 crore rupees in 2024, reflecting a robust earnings trajectory. Moreover, with an impressive 29% TTM sales growth, Kotak continues to deliver solid performance across its financial metrics. Now, looking at Kotak Mahindra Bank's technical chart, the stock is currently trading between a strong support level of 1,623 rupees and a resistance level of 2,038 rupees. Over the past year, the stock has consistently bounced off the support around 1,620 rupees, while facing resistance near 2,040 rupees. The stock is currently trading at 1,871 rupees, which puts it right in the middle of this range. Investors should watch for a breakout above the 2,038 rupee resistance for bullish momentum or a break below the 1,623 rupee support for potential downside risk. Volume and price action in the coming days will be crucial to determine the next move. Let's take a look at HDFC Bank's quarterly results. Analysts expected the bank to post a net profit of 16,284 crore rupees for the second quarter of FY25. However, the bank exceeded those estimates, reporting a net profit of 16,821 crore rupees, marking a 5% year-on-year increase. This compares with 15,976 crore rupees in the same quarter last year. HDFC Bank also saw its net interest income, NII, grow by 10% year-on-year, reaching 30,114 crore rupees. Additionally, the bank's asset quality improved, with gross NPA at 1.36% and net NPA at 0.41%, reflecting strong operational performance. Next, let's take a look at HDFC Bank's valuation metrics. The bank has a market capitalization of 12,83,382 crore rupees, making it one of the largest private sector banks in India. It trades at a current price of 1,682 rupees with a price-to-earnings (PE) ratio of 18.8, which is slightly below the industry average indicating a reasonable valuation. The return on capital employed, ROCE, stands at 7.67%, while the return on equity, ROE, is a robust 17.1%, showcasing strong profitability. With an earnings per share, EPS, of 89.8 rupees and a dividend yield of 1.16%, the bank continues to deliver solid returns to its shareholders. Now, let's analyze HDFC Bank's price-to-earnings (PE) ratio over the past 5 years. Currently, the bank's PE ratio is around 18, which is slightly below its historical median of 20.8. This suggests the stock is trading at a modest discount compared to its historical average. The PE ratio has fluctuated over time, reflecting varying market conditions and investor sentiment. It was significantly higher in early 2020, reaching above 90 at its peak. Investors should consider whether the bank's current earnings growth justifies its PE ratio, as it remains below the historical median, presenting potential upside in the long term. HDFC Bank has shown impressive growth in both revenue and profit over the last 5 years. The bank's compounded annual growth rate, CAGR, for revenue stands at 22%, while its profit has grown at a consistent rate of 23%. In FY24, the bank's revenue surged to 283,649 crore rupees, with net profits reaching 65,446 crore rupees, demonstrating robust financial performance. Over the last 3 years, revenue growth has accelerated, with a 30% CAGR and profit growth at 26%. HDFC Bank's ability to maintain consistent growth across both metrics showcases its strong market position and operational efficiency, making it a leader in the banking sector. Looking at HDFC Bank's technical chart, the stock is approaching a key resistance level around 1,740 rupees, which has been tested multiple times but has yet to be convincingly broken. The stock has strong support at 1,300 rupees, a level where it has rebounded several times in the past. Currently trading at 1,681 rupees, the stock is close to its resistance, and a breakout above 1,740 rupees could lead to a strong upward move. However, if the stock fails to break this resistance, it could face a pullback. Investors should watch the volume and price action closely to gauge the next move.